morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, guys, we have a lot to discuss today. Before we do that, just follow me over here. We're going to set that down. I just want to remind everyone that what we have right here is 100 ounces of gold, silver, and this will be given away to someone who is following Verified Investing on YouTube or on Twitter. If you want two chances, then follow them both, guys. It's as simple as that. It's about $2,500 in silver, depending on where the price is trading, but this is right here for one of you guys that are watching right now. All right, let's get right into the charts here. So what we want to do here right off the bat is kind of cover some of the key economic data. So for those of you out there, we have to look and see what happened this morning. We got Home Depot earnings, and we also got Walmart earnings. Walmart, last I checked, was up on earnings. Home Depot was down on earnings. Now, the reason why I was so intrigued by this report is because last week we saw those retail sales that were kind of not so good, right? And there's a chance that the consumer is starting to crack. Now, again, the reports that we just got out from Walmart, super, super, super important to understand that those are from the December quarter, right? So from last year. So the number we got in retail sales was from January. That was last week that number came out. So I'm very curious to see, okay, what does Walmart and Home Depot say about the consumer? But also, what do they say about their future? What's going on in the future? Are they seeing a crack in that information? Couple things I want to go over here. I am seeing more and more cracks in this system, right? More and more cracks in the economy. One of my favorite things to take a look at here is the U6 employment report. Now, the U6, and again, these gray areas denote the recessions that the U.S. has had. This is your COVID, very short one, right? But one of the things I've been noticing when you look at the U6, and for those of you that don't understand what U6 is, it's underemployed. So remember how this really happens. You might want full-time work, but what the initial stages are is you say, okay, I want to get a full-time job, but all I can find is a part-time job. That's called being underemployed. That's what U6 is. So again, a lot of times when companies lay off people, they say, hey, listen, we can't keep you on full-time, but what we're going to do is we'll do part-time, and thus that's someone that is on the U6 because they're underemployed. What I'm looking at right here, this is really interesting, is before each recession, you get a bottom point right down here, and you get a little uptick just before the recession hits. Now, in COVID, it happened a little bit, but COVID was such a black swan, it didn't happen much. But what we're seeing here is that same sort of uptick in the U6. And again, the U6, again, underemployed people, that usually it is a precursor to more mass layoffs. And listen, I've covered the layoffs in these game plans from almost every single company reporting earnings in the last quarter here, in the last month. We have seen, basically layoffs of 5 to 10% of their workforce. So according to everything I'm seeing here, the charts are continuing to show us that something is on the horizon. The Fed, again, has some major issues. Last week, CPI came in hot. PPI came in hot. And again, the problem with those is that is the one caveat that can basically bulldoze the stock market to the downside. And the reason I say that is because if inflation really did go back to 2%, then the Fed can start printing money and lowering interest rates aggressively if the economy does slip into recessions. The problem is, if you have inflation upticking, every time the Fed makes money cheaper, it's going to add to that. And the thing that people have to understand, too, is that there's no way that inflation is going to drop dramatically when you have the stock market at all-time highs, when you look at M2 money supply and that continues to increase, when you look at the amount of money that's being spent on credit cards. I mean, basically the consumer may be starting to crack a little bit, but up until this point, they've been spending willy-nilly, and that is, again, inflationary behavior, especially with the stock market at all-time highs. So, again, this is going to be the caveat. Now, what's the solution to inflation? A recession. You start to see people getting laid off, they pull back on spending, and that can cause prices to come back in. That's the only scenario I see where inflation gets back into the 2% range, is if we see a very strong recession. Okay, a couple other things I want to show here on the charts, just a few other economic chart patterns. I do want to make this point here. This top line here is the Wilshire 5000. All right, the Wilshire 5000 basically is all the stocks out there, essentially, and what we can see is we are now at a new all-time high in valuations. So again, this just shows you, if you look at the divergence between GDP, right, and what we're seeing right here, You have this divergence building again in terms of what caused that 2022 decline. Right here, this is your 2022 decline, and we're now at a new all-time high for stock market valuations in this country. And again, that is something that I'm watching very carefully because it does denote something of concern when you're looking at these valuations like an NVIDIA, for instance. Speaking of NVIDIA, guys, I have to bring up this chart right here. This is a really interesting chart. This is the NVIDIA chart compared to the Cisco chart in 2000. And again, hopefully you guys can see it. I know it's on a white background, might be a little bit tougher, but look at the similarities. Here was the run up. And look at where we are in the cycle right here with NVIDIA, right in that range. And ultimately, this is the result of Cisco. And I've drawn this comparison many, many times before. In fact, I went over many bubbles, the marijuana stock bubble, the solar stock bubble. Again, you could go through the 3D stock printing bubble, the dot-com bubble. A lot of these same similarities are in this. Now, everyone is saying right now, oh, it's different, it's different. They always say it's different. In reality, it's not. Think about Cisco was the backbone of the internet. It was the only game in town, right? Cisco was essentially the one stock that was going to build out the entire internet and create this new world for us. Is it a new world with the internet? Heck yeah, it is. But it doesn't mean it's immune to kind of the psychological greed that drives things up. And what happened to Cisco? What was Cisco's downfall? Let's talk about that. Cisco's downfall was that the margins were so good that it drew in a ton of competitors and margins cracked. Essentially, it got, commoditized. And it pushed prices and profitability so low that Cisco has never seen these same highs again that it saw during the dot-com bubble. So the idea here is very similar. Yes, AI is going to change the world. It already is. But every other semiconductor stock out there is coming for their lunch. 80% margins are not going to hold. We will see NVIDIA's report on Wednesday, though, after the close. I think it's going to be a fantastic report. But the question I would have is that as good as it gets? What happens when you have all these AMD chips hitting the market, all these SMCI stuff? I mean, all these other semiconductors, including Chinese companies that basically have been banned from getting certain chips from NVIDIA, they're now starting to try to produce their own. You are going to have a massive overdrawn push of chips, and that will crush the profitability of these AI chips over time. Not immediately, but over time. All right, couple other things I just want to show you guys. One other really interesting chart before we get into some other stuff is, bear with me here, is one other one here I wanted to showcase. And this is just another representation of how divergent the U.S. stock market is compared to the world. All right, so down here, this is the Brazilian stock market, and this is the Chinese stock market. And look at what we've seen here. Look at this divergence in the U.S. stock market. This is the NASDAQ 100, and the divergent move that it's had essentially since it really was kind of along the same path over here, 2005 to 2010. 2010, it kind of stuck together. It was really in 2012 it started to diverge, and that divergence has become bigger and bigger and bigger. And the thought process here is that there eventually has to be a reversion to the mean, which takes you something like this, where you probably have these markets coming up to you. You know, one of the things I did research on over the weekend, I do believe that the commodity side is going to be the next big thing. And I was doing a lot of research on what countries have the most reserves of uranium, of gold, of precious metals, other precious metals, I should say, and even rare earth metals. And Brazil, interestingly enough, is one that does. And again, if you've been following me, we've talked about the Brazilian stock market, right? We've talked about the EWZ. Let me bring up that chart right here. And how if we look at that bigger time frame, if we zoom out on this chart, you can clearly see that we do have a breakout of this long-term wedge pattern right here, and it's retracing to the scene of the crime right in there. And that, to me, is something that I am personally interested in and investing in on this side for a longer-term investment. Again, the thought process here, again, is if the dollar continues to kind of crumble in valuation over time, and listen, to be honest, over the last 5-10 years, it hasn't done that that poorly. But if you look at what the value of the dollar bought you 100 years ago, there's no doubt. I mean, it's basically $100 is now worth essentially a penny, in the equivalent of. So you know that that's going to continue because these governments are going to continue to spend until something breaks. The Fed is going to try to do their best to stimulate via free money and low money, and that's going to drive countries that have a lot of natural resources to the forefront of the future economy. All right, and again, that goes for China, that goes for a few other ones. Russia, even though everything's going on right there, we know what's going on there, but it also has a ton of natural reserves, not just oil, by the way. Oil, to be honest, I'm not that high on oil. I think overall we're moving towards an economy that eventually will be not as reliant on oil, but it's about the rare earths and it's about things like gold, silver, platinum, palladium, and those type of things. Okay. So a couple other things here. Let's quickly look at the U.S. dollar. The U.S. dollar is starting to break lower through this little wedge pattern here. So it hit my upper end target right here. We have been rejected, and now look at this trend line here. Short-term trend line right up. The U.S. dollar is beginning to break to the downside. Why is that important? Well, number one, generally the stock market likes it, assuming it's not because of a weak economy. But more importantly for me, this is something that could, if we see a big breakdown on the dollar, gold is going to break out to the upside, and I think that's something that's coming within the next month or two. We will see gold take out those highs. I'll cover the gold chart in just a minute. Next up, let's look at the S&P 500. This is one of the most important charts going into the NVIDIA earnings that's coming out later this week, again, Wednesday after the close. And the kicker here is we have this channel that has been, basically it's a wedge pattern, right? It's a triangular wedge pattern. It's coming closer and closer and closer. Notice how we keep on testing these low levels, right? We tested the line right down here, okay, right here, and right here. Now, if this breaks, and it might be interesting to think about, could it hold this pattern until NVIDIA earnings, and then that will be the Kickstarter of whether or not this breaks down or does it break out? I'm going to go with the breakdown scenario, whether it happens on NVIDIA or not, but I still think that these patterns, if you look at 100 of this pattern, I would say about 70 of them will break to the downside. So the probabilities, if we're talking just pure data here, probabilities are for a breakdown. Whether it's this week or not, we'll see on those NVIDIA earnings. By the way, there's two scenarios for NVIDIA that I think are plausible. One is the stock is going to drop on earnings after hours and it's going to open lower the next day. Another option would be that NVIDIA opens up on this robust earnings beat, tremendous, hype, but then it starts to collapse, a la basically what we saw with SMCI. Now, SMCI didn't have earnings. It was just a lot of hype. But essentially what we recall here, for those of you that have been following this stock, the stock opened at around 1077. That was the high right up here. And within one day, it closed at 803. Now, that was after a ridiculous move to the upside. I mean, this, to me, if you had asked me if this was a meme coin or a stock, I would have said meme coin every single time because of this vertical nature of this move. But again, this is a lot of times what happens is, people get excited on earnings and they buy in after hours, and then when the stock opens, big money sees all that volume that's buying, and they start dumping into it. And they basically are saying that it's not that NVIDIA is not a good company. They say that valuation has gotten too rich, and that the best is now factored in. The best is behind them, right? So the idea being is that, yes, NVIDIA is going to have monster earnings, but you have to look forward. And forward is more competition, lower margins. Is NVIDIA's chart as good as it gets? And again, it's kind of the same general. You didn't have the earnings on SMCI, but the same potential drop there on NVIDIA earnings. And we'll see. I could be totally wrong. I've been wrong before, and I'll be wrong again. All right. Speaking of NVIDIA, guys, it is down pre-market just a little bit here. So let's just go through a couple things here. NVIDIA, again, is trading after a massive move from about 400 and change all the way to 700 and change. You did get this little doji right here. It's not as good as the topping tail. Topping tails are more powerful. But again, notice how you haven't taken out that high just yet of this doji. Dojis are basically 60% positive reversal signals versus a topping tail would probably be in the 70-75%. So again, there's all these probabilities come with certain pattern formations in the market, and that's what I'm trying to discern to you guys to give you guys the most likely outcome. It's not always the outcome, it's the most likely. All right, so again, I'm watching that high right up here. Today we are trading down just a little bit. Couple other charts to go over here. Watch Apple this week. Apple is one that is on my radar because it is borderline a major breakdown. What do I mean by that? Well, if we look at this chart, we have a very clear trend line that continues to get hammered, right? So again, this trend line, interestingly enough, if I zoom out, look at how far back this goes. Pivot low to pivot low to pivot low and pivot low. So you've now hit this trend line 4 times. In my analysis, in my methodology, 4 times is standard. Usually you break on the 4th or the 5th time you hit the line. That's how many times like think about ramming that door, right? If you ram that door over and over again, once, twice, 3 times, man, your shoulder's hurting a little bit, but it's weakening. 4 or 5, that door will bust open and you can get to the other side. The other thing to keep an eye on is you could make a case you have a little pseudo head and shoulders here, right? You have this little pattern right here, this little head, and this little shoulder right there. Now again, if that's the case, then you're talking about a target price equaling this drop here, which I'm just eyeballing it right here, but basically 170, let's say to 200. So you're talking about potentially a move down in this 145 to 150 level. Interestingly enough, just looking at this, kind of matches up with these areas right here on the chart. So again, if we did see a break there, this would be a logical target zone of 140 to 145 on Apple. And by the way, we're seeing it more and more. Apple is becoming the old school player, and we're now seeing the new players, which are the AI players. Microsoft, those are the new players that are the hot money. That's where money is rotating more and more. All right, just a couple other charts, guys. Walmart, again, did have earnings. Take a look at pre-market on Walmart. This was already at all-time highs, which is somewhat unusual, but they had good earnings. But I would not be surprised if this reverses during market hours. I am not short Walmart. I'm not long Walmart, just to be clear. But again, big move up here pre-market. Let's take a look at the daily chart and just see exactly what we have here. So if I zoom out, let's go to the weekly chart. In fact, we'll look at the weekly just to kind of see the bigger picture. What we can see is that Walmart has had this long kind of grind to the upside. Now again, looking at where this could go, I mean, this is a trickier chart because you're in uncharted territory. The only thing I could see, again, there's a couple lines here that you could make a case, maybe up here. These don't really, these kind of come right into this area as well. But again, somewhere in that 175 to 180 level, you should have some resistance, and I think it's trading at 178 right now. So I'm curious to see when markets open, how does the market react to this, or what do we see some selling pressure kind of envelop it? Lastly, on these charts, guys, here's Home Depot. Home Depot's down a little on earnings, nothing too crazy. For the most part, the earnings from the 4th quarter were pretty good for both these companies. Again, that was the Christmas season, makes sense. What I want to see again is what do we see from retailers in the January, February, March quarter? Because that's when those retail sales that we got last week showed the first sign of the consumer potentially cracking. All right, back to center screen, guys. We're going to take just a couple basically 1 30-second break to thank Lux Algo. Again, I'm still working on that. I will keep you guys posted, but it is going to be fantastic. Just watch this.
Have you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo. Please visit the description below and sign up for Lux Algo today.
All right, guys, we are back right into Bitcoin. I know everyone wants to know everything about Bitcoin here. So a couple things on Bitcoin. Number one, we've had this nice move up. We know we got to this 50 to 52,000 range. It seems to be holding, at least as of now. For me, the most important thing, and again, I have this other yellow line here. I'm actually going to delete it because I think the more important factor on this is honestly just the channel pattern, right? So if we zoom out on this pattern here, and let me refresh this right here. And this is the most important thing to me. So what we're seeing on this is just a continued kind of stay within the channel type pattern. We have that, we have the high end, we have the low end, we have the high end, and what did we hit right there? The high end. Now, if we push up above this, that's another story, and that's around 53.3, I think, is the upper range here now. But right now, I'm just keeping an eye. This could be considered a little bit of bullish consolidation, so we'll have to monitor that. But ultimately, I want to see, do we kind of continue up and we retest this upper channel line, or do we have the failure of the pattern, which then would denote a retrace? Now, I'm going to tell you guys exactly what I'm keeping an eye on, right? Where am I getting concerned, or where would I really think that there's a lot more downside? This level here. What you always do is you look at the former major high pivot. And if you, as a bull or a bear, doesn't really matter, as just someone of a studier of the charts, if you see price starting to come down and you start to see daily closes below 49,000 right here, that would be a warning sign as a technician, okay? That would be a very, very big warning sign as a technician. As long as you stay up in this upper range, there's always a chance we go retest, potentially even going a little bit higher. But breaking below this area, which again is around 49,000, that would be problematic for the charts on Bitcoin. All right, couple other charts I want to just show you in the crypto markets. I do want to show you this chart of Ethereum. So Ethereum's finally getting some love. And what I mean by that is you're actually seeing this outperform a majority of the other cryptocurrencies, right? So just looking at this chart here, we can see that we had a channel, and the channel was doing everything you'd expect it to do. From the lows here, kind of almost came to the highs there, back to the lows. We then tagged the high, we had the big pullback, and then we've broken out. Now, you do have a couple levels of resistance. The first one is right in this range right here with this pivot. That's right at the 3,000 level. I do think you're going to pierce that level, right? I mean, it just makes a whole lot of sense. In fact, it almost looks like we might have at least touched it today. It looks like the high was 3,002, so it looks like we just pierced that. Even numbers can sometimes work as resistance, so we got to monitor that. If it gets through that, you have 3,300 as your next resistance, okay? Now, the only thing as a bear, if you're looking at what's going to make you more conservative, whether you're bullish or bearish, what do you not want to see? As a bull, you don't want to see us break below this channel and get back inside of this longer channel. So again, watch that 2,800 level on the charts. That is going to be the key level there. Lastly, I'll just cover Avalanche today, guys. Avalanche has been somewhat on the weaker side of things. Look at these two parallel lines, right? So we can see, again, I love my parallels. You guys know that. They work amazingly well. We kept hitting. We broke. We went to the low end. Now we went to the high end. Look at how price is getting rejected. So as a technician, first of all, this is off of this move. This is kind of a bear flag pattern, right? You have your bear flag there. But essentially, if you're looking at this, bear with me there. Let's get some of that out of there. But basically what you're saying to yourself is watch this low level around 36. If 36 breaks to the downside, you're likely heading back to the 28 level. On the other side, if you can get through, let's say 44 to 45, you then could then test the $50 high right up there. All right. So again, my goal here is to give you that kind of both sides, you know, whether I'm long or short the trade, or even not even in it, I do want to give both sides so we can view both sides of the bull case and the bear case, where to be concerned, where to think that it could continue to go up, where's your breakout level, where's your breakdown level. All right, on we go to just a couple more charts here in this morning's game plan. Of course, we got to touch on gold. I love the price action in gold just over the last couple days. We can see, again, look at this nice little move up here right off of this little level here. All right, now, again, for me, what are the things I follow on gold? So I follow what the central banks are doing. The central banks are buying gold hand over fist. I follow what the retail crowd is doing. The retail crowd is super, super, super underinvested in gold, all right, and gold miners. Those are two disparities. When you see kind of what we would consider the smartest of smart money, which is the players that basically control the system, they're the ones buying gold, and you see retail investors underexposed, that makes me very, very bullish overall. And you guys know I've been bullish on gold. So ultimately, we have this area here, right? We just came down and retested it last week. We're now pushing up. Short term, I'm looking for this level around 2050 to get taken out. If that gets taken out, this 2075 level, which is that previous kind of line that goes back to 2020, that is your level. Now, we did pierce it over here. That was a split second, about a 10-minute pierce, when the futures had just opened on a Sunday night. Somewhat inconsequential, but what you're looking for is not just a pierce. I want to see a daily close, at least 3 of them, above that trend line. We get 3 daily closes above this 2075. It's off to the races, in my opinion, and you're going to see a lot of catch-up trades, a lot of hedge fund managers, a lot of other players very underinvested in gold, and there's a lot of upside that can occur there. All right. I have a couple other charts just to go over. Here's quickly your crude oil chart. I've covered this pretty much nonstop every single session. Please notice we have this trend line. Now, one of the positives for crude oil here is you're actually starting to make bullish consolidation just below a resistance line. Again, somewhat like the Bitcoin chart, right? So we talked about that as well. Consolidating here, can it break through that line? If it does, there's a level up here, 85 to 86, that is going to be important. Now, the key here is just reminding ourselves that if we see oil continue to move up, it's going to put pressure on the PPI and the CPI numbers, and those are the inflation numbers. Lastly, I do want to touch base on this chart, which is the natural gas chart. Notice quickly here, we've had a couple bounces right off this technical level. Remember, this is essentially a measured move. Take this high to this low, to this high to this low. It's essentially an equal drop in dollar terms right back down. But what's interesting here, and this almost looks like it's getting a little manipulated, is if we quickly flip to the 10-minute chart, natural gas this morning was actually powering up, and then it just got punctured. I mean, essentially, it got hammered right back down here again. And I've seen this so often down in here. I don't know if it's a liquidation being forced by a fund or if there's something else going on here. But this has been a very normal thing where you could see, even back here, you have these pops, and then it gets just pounded down. Pop, pounded down. And then even here, opened lower, fought back, pushed back down, big pop, pushed back down. So I want to look for that to change, right? And that's going to be something that we're going to keep an eye on. All right, follow me over here, guys. Just follow me right here. I got to grab my end of the game plan ball here. But as always, guys, I want to say thank you so much for, basically following these, for supporting me and doing everything else. I want to try to do this real quick. Let's see if I can. All right, decent. You guys take care. Have a great rest of your day.